Cool. We're live, everybody. It's 5 o'clock. Friday night. You guys got plans after this for this weekend?
I do.
What do you got going on?
Well, my husband's birthday is today, so I got to do
Oh
that.
yeah. Happy birthday. See.
Mm-hmm.
He's only turning 25, right?
Of course.
What are you guys gonna go do? You guys gonna go to a bay? Or go to the
No, we
cabin?
actually came back. We just picked up his mom so that, we can celebrate it as a family and everything. And we have her for the next 2 weeks.
Nice.
Okay, that's what's up. What about you, Charles? Plans, weekend, anything?
Yeah, you know what? I'm actually just gonna move some stuff around in my house. We kind of just shifted
Like
some
that
things
big
around.
piano behind you?
Yeah, that big piano. I gotta move some stuff around now. But no, I just gotta move some stuff around, and we're gonna be kind of going back and forth to storage and cleaning some stuff up. So just busy weekend, just kind of moving things, cleaning things. Getting my son's room set up and everything else. So yeah, now it's gonna be good. Get some stuff done. I like getting stuff done. I like you know making a plan and getting things done. It's always good. So
You said you only have one child at the moment, right?
yeah.
Wait till you get three.
As you said, at the moment, I don't. There ain't gonna be no at the moment. That's the child. That's the child. He's 14, so I got 4 years left now.
That's true. 4 years left. That's right. Okay, well, while we're waiting for more people to join, just give it a few more minutes. Hopefully, everything sounds good. Sound checks all right. Things like that. Um, while we're waiting for that, let me just kind of get my screen share a little situated. Then we could begin. A quick rundown of today. We are gonna just do our market update, the usual weekly market update from me and from Lisa. And then from there, we'll talk more about affordable loans or programs out there, if there is even any out there. We'll talk about that, pros and cons, of course, comparisons, numbers, all that jazz. And then we'll talk about cross-space and why it's important to get down there, as Charles will show you guys in a bit. And then hopefully after that, we have a little bit more time. We'll talk about something extra, all right, that a lot of you guys have been reaching out to me in regards to. And it's about the market, okay? Just FYI. So that is the topic for today. Let me just go ahead and open up my screen, and then we could go on with this market update. Look at that beautiful chart that we love to see. So we are in the week of September 8th on Friday. Here are the numbers. As you guys can see, this week, inventory did go a little bit down compared to last week by 1.7%. There is no new listing compared to last week. Man. Okay, that's interesting. Sold homes are up 8.6% from last week. Pending homes are also up 8.6%. Very interesting how they're both 8.6. Okay. Now, last month, inventory is a lot higher by 4%. I wouldn't say a lot higher, but 4% higher than last month, same time. New listing is down 18% compared to last month. Sold homes are down 36%. And pending homes are down 9.8% compared to last month. Same month last year comparison. Inventory is down 48%. New listings are down almost 30%. Sold homes are down 43%. Pending homes are down 14% from last year. Year to date, compared to last year's, inventory is down 48%. New listings are down 37%. Sold homes are down 30%. Pending is down 26%. Man, everything is down, huh?
Mm-hmm.
One more look at the chart for everybody at home. Oops, sorry about that. Let's go over the average price per square foot. Went down 2% from last week. Last month, it is also down 4.1%. Last year, same time, 0.6% decreased. And year to date, it is 5.5% down. Year to date.
Right. The market going down right now, Chia, I think it's, would you say that because school has already started, this is kind of the norm, right, during this time?
It is. It's starting to, because a lot of the people that were in a hurry to buy before the school year started, so that way they could register their kids and all that. Those buyers that wanted to buy for that reason are no longer in the market, because can't register their kids anymore. So that's that. And it's the winter time, a lot. Holidays is around the corner. People's kind of thinking about that New Year's party, that Black Friday, all the holidays. So should I save to buy gifts for the holidays? Or should I save to buy a home? It's always choices, right? So it is starting that fall transition, and this is pretty normal. That's kind of why I always like to tell my buyers, if you guys want the best deals, it's normally around this time going towards December and January, because the sellers that do need to sell normally have to sell because there's not a lot of competition for buyers. So tip. Days on the market. Oh, what was that? What's going on? Okay, there you go. My mouse wasn't working for a second. Days on the market. How long on average does it take for a home to go pending? From last week, it went up by 4 days. On average, it's 27 days now compared to last week. It was 23 days. 99% of sellers are getting what they're asking for. 99% of that. So there's no change. Last month, same time, it went up by 4 days. So 26 versus 22 days last month, same time. And this month so far, 98% of sellers are getting what they're asking for compared to last month, 99%. And last year, 26 days on average this year compared to last, which is 31 days on average for a home to go pending. Okay. Sold same time last year, 95% versus this year's 98% of sellers are getting what they're asking for. Year to date, 32 days on average versus last year, which is 18 days. 99% of sellers are getting what they're asking for. 101% last year sellers was getting what they're asking for. Again, if you price your home correctly in this market, you will get your home sold in the timely manner. Okay. You guys are looking at this and it says 30 days. Last year it's 18 days. You guys are thinking, okay, homes are staying on the market longer. Yes, it is. And it kind of is related to what Lisa said earlier about the school starting. Parents are worrying about holidays now, because kids, they have a lot of gifts on their bucket list and they're just trying to check off. Holidays all around the corner, Black Friday, New Year's, all that. So there's a lot of things going on right now. So there you go. Not even to mention nieces and nephews. Oh, Lord. I have an in-law. All my in-laws' kids combined, I'm thinking about it, it's like over 20 kids. 20 kids. That's just from my wife's side. Can you guys believe that?
Well, you're
That's
lucky that your
crazy.
wife does all the shopping, I'm sure, Tia.
Oh, yes, she does. Yeah. Right. I just pull out the credit cards, right?
Yep.
Okay, average price sold and average price that is for sale. No change from last week. Active price, but sold price did go up 3.7% on average. This week, homes that was selling was on average 610,000 versus last week it was 588,000. Last month, same time, active price was 744,000 versus last month, which is 756. And sold price was 622 this month so far compared to last month, which was 648. So it is down compared to last month by 4%. Active price this year compared to last year, it is up 11%. Sold is also up compared to last year, 3%. Would you look at that? 3%, y'all, same time. Year to date this year compared to last year, active price is 744,000 versus 666. Oh my lord, 666. Let's go get some lotto. I was just playing. Sold price on average 580 this year's year to date versus last year was 606,000. Okay. Now let's go to months worth of inventory. Before I begin, go on. Did you guys got any questions, Lisa, Charles?
No, this is good data.
I know it is. It's always good to look at numbers to reflect
Mhm.
and see how far we've come. Months worth of inventory. Let's just go straight down here. We got 2.1 month worth. Oh, bleh. 2.1 month worth of inventory this month compared to last month. It was 1.2. So it is up by a month, but still below the 3 to 4 months worth of inventory that I feel would create a more steady market for buyers. Right now, it's still technically a seller's market. Okay. Now, you compare this to last year, same time, it is a little bit lower, but it is almost identical. As you guys can see here, 2.1 month worth this year, 2.2 months worth of inventory last year, same time. And year to date, look, 1.3 months worth of inventory year to date on average versus last year it was 1.8 months worth of inventory. So we still need more homes. Okay. That this once inventory goes up, everybody, prices will mellow down because again, supply demand. You guys hear me and Lisa talk about it all the time, but it does still play a role. All right. And that's the market update. Questions? Everybody? Anybody? Somebody? All right, Lisa, go ahead, share your screen. How are the rates looking like today?
All right, so it looked like it came down just slightly a little bit this week, which is great. Let me go ahead and share with you my camera. Okay. 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 Can this be seen?
Yes.
Okay,
see it.
perfect. So I'm going to start this out first, guys, just so that you have an idea, because we're going to go ahead and go into talking about what are the available loans down there, what are down payment assistance, even though the Cal HAFA Dream for All is not out yet. There are other down payment assistance programs, and I want to show you guys the numbers to see if it makes total sense for you. But before we go into there, I want to show you what the average home price, what the average household income is. So the median income right now is 113,900. But for qualifying for low income, you're going to have to be in the 80% area median income, also known as the home possible income limit, which is under 91,120. This is going to
How
make
big
a
is
little
that
bit.
household family for that 91,000, Lisa? Sorry.
Well, household is just household. It doesn't really say how many people are in the family, but typically, it's just whatever income if you're a one income household, this would be the average. So it doesn't break it down that way.
Oh, I see.
Okay. Yeah. So this is just average, per person in a home.
Okay.
Or per family in a home. If it's just you, that's working, if it's you and your significant other working, that's how it's calculated. Okay.
Wow. Okay.
Okay. So although, I don't know, back in the days when we hear six figures, it seems to be like a good amount. It's supposed to be the amount that's, hey, if we get there, we're going to live pretty comfortably, right? So
Yeah.
once I price it out for you guys can determine yourself, hey, is this still comfortable for me? And what does it take? What does that number really break down in hours, right? So I'm going to go ahead and go with that for you guys. This is the CalHFA site. This tells you what the interest rates are, what the available pricing are. this is what today's average interest rate is, okay, guys, for a 30-year fix. It's at an average of 7.22. 15 years, 6.59 still. Jumbo is actually higher right now at 7.3. ARMs, as you can see, really not that much of a difference, okay? FHA is already at the 6.74. Again, this and this, it's not that different, not that different of a margin, where before it used to be 1 or 2 points of a difference in the margin. And VA, very, very similar in this pricing, okay? What I'm gonna price out for you guys is what we have in our company right now. Luckily, it is slightly lower. So I'm gonna show you the spreadsheet of what you guys would qualify for. So earlier, what we were talking about is income, right? So to keep you guys under that 91,120, basically if one person makes $22 an hour, the other person slightly less than $22 an hour, you'd qualify for the low income CalHFA interest rate, okay? So we're gonna go back here, see, low income, this is what the rate would be. If it's higher than that, this is what the rate's going to be. It's slightly higher. I'm going to go ahead and price it out on the low income, okay? Don't pay attention to this right now. I'll go over that in just a little bit, okay? I'm putting it at 500,000. As you can see, with the average prices that Chia gave you the data earlier, this is well below that. But we do have plenty of first-time buyers looking in the 450 to 550 range. So I'm going to put it at the 500 here, okay? If you were doing the CalHFA Dream for All, which again, it is not out yet. We do not have a concrete date of when the second round is coming. But if that was the case, this is what the interest rate should be based on the chart that they have. This is the monthly payment, okay? And typically, the origination fee for the down payment assistance programs for this ranges between 1% to 2%, depending on the lender that you choose. I'm going to go with a worst case scenario at 2%. We're doing it at 1%. But again, just in case, you guys are super prepared to see what the numbers kind of look like, okay? I'm doing it at 500,000 across the board. And before I continue, is this screen big enough for everybody to see, Chia?
I was gonna say, if you could zoom in a little bit on each section that you're talking about, it'll be easier to see the numbers, because I'm having a hard time as well.
Okay, great. Let me go ahead and make it bigger. Does that work? Is that big enough, guys?
Yeah, that's good.
Okay, great. So there's a lot, right? There's a lot. So I'm gonna go down each one for you guys to see that difference, because right here, if you're putting 20% down, you don't have mortgage insurance. So look at the difference in between the mortgage, the payments, right? It's a pretty good amount. I mean, okay, if I do this.
The reason I wanted Lisa to go over these numbers with all you guys is because I've been getting a lot of you guys reaching out to me, asking me for particular programs about low income, affordability, anything that will help with down payment assistance, basically. And right now, these are the programs for it. And you guys could kind of compare it. Even though your scenario is going to be different from what Lisa's showing you guys, it's a good starting point so you guys could get an idea and know the whole package, what you're dealing with here. Because when people hear, yay, I'm getting my down payment assistance, yeah, but it's not all roses, like what Lisa's gonna go over with you guys. There's pros and cons to these programs. Not saying that they're bad. It is great. Me and Lisa have helped a lot of clients in the past with these programs before that was able to utilize it and make it work. Again, make it work. That's a key word here. You gotta make it work. And unfortunately, not everybody can make these numbers work for their situation.
Correct. And I'm so glad that you brought that up, because we're going to go ahead and circle back on that. I just want to show you the numbers for right now. And this is the reason why I love seeing the data, because we're going to tackle another question that the audience has later on that. So as you can see, the difference between you putting 3.5% down or 20% down, okay, one, the interest rate is slightly lower if you're using the CalHFA regular FHA program. It's at 6.75 right now. Again, I'm going to go back to here, okay. You can absolutely, this is public information. If you'd like the link, I'm more than happy to share that link with you guys later. This is what that interest rate, and this is where I'm getting that.
Okay.
If they are using a CalHFA program, we have to use the CalHFA rates. Okay. So
Got it.
being that that's the case, this is the monthly mortgage there, and this is the monthly mortgage here. Now, with all the closing costs, I'm going to stress again, usually I will always price out what the closing costs are for both parties, seller and buyer, that leverage, and you have that readiness to say, hey, you know, Mr. Seller, I really love this house. I know I need to use down payment assistance, but I'm willing to pay my closing costs and yours. A lot of times, and Chia can vouch for this, a lot of times that little oomph will give you that slight edge for you to win that offer on a market that's not favorable to buyers currently right now. Okay. So being that that's the case, this CalHFA program does not allow you to have any closing cost credits. So going back here, this is just the regular CalHFA down payment assistance program with no closing cost credits. Okay. And if that's the case, if the closing cost is higher, we're looking about a little over $21,000 that you would have to bring in. I want to share with you this comparison because if you did a regular FHA loan, there is no upfront origination cost on this. This is par rate. Okay. Par rate right now for us is 6.625. So it's slightly lower. Okay. And for a few $1,000s more, not only do you not have to use this program, and again, if you absolutely.
Oh, we lost you there, Lisa.
Has multiple people looking at the property, it might not be favorable to ask for closing cost credits.
Lisa, you just cut out for like a good 5 seconds there.
Oh, sorry about that, guys. Sorry about that, guys. Okay, so if you are in a market and you can ask for the seller to also help with the closing costs, this absolutely may work a lot better for you, because if not, then the difference between this and this closing cost, okay, is not so different after all. Okay, so if I were to take this, it's $76.49 of a difference. So if you have that already prepared, this you do have to pay this back. Okay, guys. So the down payment that they're helping you with, or the closing cost credits that they're helping you with, you will have to pay that back when you sell your house or when you refinance. So it's not free money. So if you have it up front, I would recommend going that route, because in the long run, it does save you a lot more money. Okay.
Or like what Lisa was saying, you could get credit from the sellers.
Correct. If you can get seller credit and everything, and I've seen Chit do it numerous times, just keep in mind though, that if you're up against multiple offers, doing that up front might not get you the house to begin with. So be very cautious when you're doing that, and definitely talk to your agent about that to see if there's any way, if the house has been on the market for a long time, yeah, you probably have a pretty darn good chance. If the house is very popular, you're going to the open house and you see multiple groups of people coming in, that might not be the best option for you. So knowing your numbers and the worst case scenario possible will help you be more prepared. Okay. All right. So CalHFA has several programs. The next program is the CalHFA Conventional. Okay. I'm going back to this here. Why would you choose the conventional versus the regular FHA? If you look at the mortgage insurance wise, it is going to be less, especially if your credit score is excellent, and 780 and above, it's considered excellent. Okay. And on top of that, once you build at least 20% and you've had the loan for at least 2 years, you can always call into your servicing lender and say, hey, I believe that I have enough equity in the house and everything like that. I'd like to remove this. You can absolutely do this with a conventional loan. And in a market that's volatile as it is right now, it might be in your best interest to do it that way, simply because if the interest rate keeps going up like this and it's not favorable for you to refinance, as in an FHA loan, you have to refinance or sell your house in order to get rid of this mortgage insurance, right? So this one, you have an opportunity if the housing market keeps going the way that it is, rising interest rate and rising home purchase price, and it's not favorable for you to refinance, this option, knowing that in 2 years you can remove that and voila, you just save that amount of money. Okay, you just save about $186 a month. Okay, if you choose the CalHFA, and I'm going to go back here again, right now, the down payment assistance for CalHFA with FHA does not allow you to have 2 or 3% closing cost credit at all. Okay, because it is so volatile, they're not offering it at all right now. For conventional, they are only doing it for 2% though. When Chia and I were helping a lot of people do this, when this program was absolutely very favorable, it allowed them to have 3% and the interest rate was not jumping up this high at all. Okay, and during that time, a lot of the sellers were more open to giving closing cost credits as well, so it was more favorable at that time. During this time, even if it was available, as you can see, if getting 2% closing cost credit already bumped up a whole percentage rate on the interest rate, if you did the 3%, it's going to even go higher. Okay, so right now, okay, if it's at 6.875, it's jumping to 7.875. Could possibly jump to 8.875 if the 3% was even available. And if it was, this is how much you'd be bringing in. But look at the difference in the payment. It is much higher. This is important to note because if you see everything in the red right here, that means you technically don't even qualify. You have to be below the debt to income ratio. So what does that mean? For somebody that is in this income bracket, technically, in order to qualify, okay, even with a 2% credit, right there,
You
it's at
cut out
49.
again.
So in order to qualify for the 2% plus CalHFA, your maximum purchase price is only $430. Can you hear me now, Chia?
Yeah, I can hear you now.
Okay, great. So in this program, let me see if we can even go down to $450. Okay. I put it at 45% to be safe, guys, because not everybody qualifies for up to 50% with 3% down. Okay. There's a lot of other contingencies. Your trade lines count, how much, how long you've had credit and everything like that. So when we run a desktop underwriting approval, it will tell us that. So that's the reason why I make it a little bit more conservative to put 45. But if everything checks out, you should be able to go up to 50% debt to income ratio as well. So for here, I would say, let's see here. Okay. So I want to share with you guys these across the board when we're looking at your options and whatnot, and we say, okay, if this is your household income, okay, we gotta stay in between the lines, right? So that means for FHA, you could possibly go up to 435-ish, okay? If you're doing the CalHFA conventional with no closing cost credits, you can go up to 470. If you're asking for closing cost credits, 430. If the 3% was even available, 400. And for a regular FHA, let's see if we can go up to 4. Okay. So the basis and the premises of showing these numbers for you guys is that you can see, okay, it is available. All these programs are available if you fall into this category. But if you do the 3% here, okay, well, let's see if we can go up here. Okay. depending on what you're looking for, okay, you may or may not qualify for any of these buckets because you're like, okay, well, I don't see anything that I like in the 430 range. I have to go to the 470. So you're really on the Calhafa conventional or the regular conventional. So say, for instance, if you wanted to do 5% down, okay, what would that look like? The difference is this much, okay, and the closing cost difference is this much right here.
So
Okay,
about $12 difference.
correct. So each of you guys have a different scenario, right? And depending on what you qualify for and what your monthly payments will look like, keep in mind, guys, all right, when we qualify you, it is based on your gross income. So if 50% is going into your mortgage already, you may want to consider, okay, if you have young ones that have to have tuition, that have to have diapers, that have to have daycare, do these numbers still make sense for you? Okay.
I like how Lisa always puts the chart up like that for every case by case scenario for the
All
client.
right. So I'm going to stop it here, guys. Any questions so far?
Yeah, I was saying that I like how you did that chart for every client that you work with, because you sent that chart to me too, so that way I could also be side by side with that client as well when you're explaining it. And I like that because then you could compare now, and you could see
Sorry, Chi,
exactly.
I guess my internet is just really, really great.
Yeah. Yeah, you're cutting
Yes.
out a lot. You are cutting out a lot. Oh, yeah, you're cutting out a lot. But like what I was saying though, when you see like a chart like that, as a consumer, you could decide which option is best for you. If you want to know everything about your scenario, the money you make, the debt you have, and the credit score, and then you want to only qualify for down payment assistance, CalHFA or so, then looking at that chart, you could decide, okay, wow. So if I ask for more credit or more assistance, I could only go up to this much. Okay, if
Correct.
I bring in more down payment, I could only go to this much. It helps you decide which one is best for you, because then now you know the maximum and you know the minimum you could buy, right? And then from
Correct.
there, depending on the type of home that you're looking at, or that's interested in you when you're out there shopping homes with your agent and you're ready to pull the trigger and submit an offer with them, then now you know which one to use. You could just pick whichever one that falls within that budget price point and then use it. And then Lisa would just send you a digital copy of the pre-approval letter based off of that program, and then you submit it in with your offer. So that's
Correct.
what every lender should be doing with their clients. So that way it puts you in control of what you want to utilize, not the other way around.
Absolutely. And legally, guys, as a lender, your lender should be giving you at least 3 options so that you can have something to choose from. Okay. If you're going online and they're just spewing out whatever it is that you tell them to do, you might want to get a second opinion to make sure that you didn't leave anything on the table.
Yep. Always, always, always.
No, I just really love that you put all that together in the chart like that, because it really does give an idea about what people are looking for and what they're going to end up getting. I mean, the monthly payments and the closing costs and all that. I mean, it's really spelled out for you in there, and it makes it really easy to figure all that out and make a good decision on that.
Yeah, well, I try. I mean, I was a first time buyer myself and nobody showed me this, and I created it just because in a regular loan estimate, it gets very confusing for clients. I was like, where is this coming from? What does this look like? And everything like that. So it's easier, like you said, to break down and say, hey, these are the comparisons side by side, lender to lender. Even I've done that before as well, especially with new home builds, just to say, okay, this is what they're charging you extra. We don't charge here, and so on and so forth.
Nope, I love it. I always appreciate it whenever you do all the numbers, because then now it gives somebody a actual figure to
Right.
compare it to, But I'd still recommend you guys to reach out to Lisa if you guys want to do a budget price sheet, because again, your situation is going to be super unique to just you.
Yeah.
All right. Next in line, Charles, you ready for us?
Yeah, let's do it.
Let's do it, man. I'm going to share your screen. whenever you're ready.
Yeah, no, I'm good. You can go ahead and share. So, I mean, honestly, this is one of the things that I feel like is, this comes down to. So, I'm talking about crawl spaces. So, crawl spaces would be, a home with a raised foundation. So, just to kind of explain a little bit of the difference there, some homes are built on what's called a concrete slab foundation, and basically, when they're building the home, instead of putting in walls and poured concrete and building the house over the top of a foundation that's raised up so that you can actually crawl under it, add piping, whatnot. A slab foundation would be a foundation that is basically all concrete. They just put forms on the outside and they fill the entire thing with concrete, smooth it out, and then your entire floor structure is concrete. So there's no crawling under it. Anything they're going to put in plumbing, into your bathrooms, any of that stuff, it's all built into the slab. And so raised foundation or crawl space homes make it actually a lot easier to do upgrades if you ever want to in the future. Definitely something to think about when you're buying a home. Is if you want to do some kind of upgrades in the future to where you're going to move things around in bathrooms and all that, as opposed to having somebody come in with a jackhammer and actually have to jackhammer up the floors and change a lot of things. With a raised foundation, as long as the support is there, you can actually move things around and change things without having to do that. And then same thing with adding additional things like piping, electrical, and all that. That can all be done from underneath the house. And before I started doing this, there was nothing about going under a house that sounded appealing to me whatsoever. And obviously there still isn't, but it's actually not as bad as I ever thought it was going to be. But there's a lot to a home with a raised foundation that should be inspected and should be looked at on a regular basis. And so I actually have a tool that I use when I'm doing my raised foundation homes, and it's basically a radio controlled vehicle with cameras installed and lighting. And so what that allows me to do is with the cameras that I have, it allows me to actually have a view that most people wouldn't have when they're crawling at home. So the 360 view on this, it's basically in all different directions at all the time. And then while this thing's driving around, it has this view at all times, right? So that's one of the things that is obviously very, very helpful in a situation, because as a person crawling through a house, you're looking around, but you're not looking around all the time, the entire time you're crawling around. In fact, some of the times you're crawling, you're looking over here and you're crawling and you're moving around, but you're not going to get the same vantage point that this tool that I have will. The other thing that's really nice about it, especially during the winter months, when you have some crawl spaces, it's very common to have crawl spaces with standing water in them, or just muddy, from all the rains that we get. The nice thing about this is I can actually drive this thing around in the mud, or at least 4 to 5 inches of water, and actually be able to do an inspection on a home that we might not have ever been able to do if in a normal circumstance. Because trying to crawl through a home, a sub area that's flooded, there's a lot of hazards that come along with that. Some of these soils, have different chemicals in them just from the years. There's also sometimes, as you can see in this picture, electrical wires that are hanging down into the crawl space, and could be potentially hazardous. So there's a lot of different situations that crawling through a flooded crawl space could present a hazard to the person that's doing it. And so having something like this, it's already hazardous as it is, but having this kind of a tool makes it definitely a lot better to do that. So another thing would be, if you have openings in your crawl space vents, and you have animals underneath your crawl space, and you have a lot of feces, maybe you've had rats or other types of animals that have decided to make a home under your home, you might not know about it because they're not coming into your house, they're just underneath your house, right? But this is, again, the same kind of thing. I talk about this all the time, deferred maintenance and whatnot. The maintenance that needs to be done on the outside of the house is the same kind of inspection and maintenance that needs to be done under your house. And then don't always trust the trades that come by to do things for you. For example, cable installers, obviously we love our TV. We're getting to the point now where we're doing a lot of the streaming stuff, but satellite TV and cable installers and all that, there's still people that still get that kind of service. But the problem is that most of the people that do that, they kind of, they don't have the same standards in some cases that some of the electricians and plumbers do. And so they'll just, punch holes and whatever and not worry about, if it's sealed or not. And then you get rodent intrusion. And then they'll just leave cables, all over the ground and, poke holes and do all these things. So it's definitely important to make sure that, you have somebody coming behind. Obviously, most homeowners don't want to do this, but it's definitely a good idea, to have good people that you trust and, be able to have these things looked at. So in this particular case, this home actually had some pretty severe rot underneath one of the bathrooms. And, one of the tests that home inspectors and pest inspectors will do a flood test. And what that entails is taking a tile shower pan in a bathroom and actually filling it up with a small amount of water, maybe about an inch or so of water. The shower pan is not supposed to leak at any point. Obviously, you're not filling up the shower when you're taking it. You're just standing there and the water's rushing down, whatever it is. But that shower pan is supposed to be waterproof. So when it all is installed, there's a waterproofing membrane or material that goes down before the tile is actually installed. And it's not meant to leak. Obviously, if it leaks and allows water through, then you start to have problems like this here. And what's happened is over time, water's leaked through that. Here, I'll actually turn this on. You can see it's leaking right now. Water has this has failed so badly that literally water leaks through this all the time. And as you can see, the areas that are
wait. Question. Did you just leave the bathroom running while you went underneath with your little drone?
Well, here's the thing. The other thing that's super awesome about this thing, number one, I didn't leave it running, so I left water in it. But the best part about this is that I can drive this around and stand in the bathroom and run water.
Oh yeah,
so
yeah.
I can go into the bathroom, flush the toilet, and be underneath the toilet at the same time and verify that toilet is leaking right then and there, right? So no, this is actually, I left this. So what I did was I filled up. I put a stopper over the top of the shower. Shower stalls are about 2-3 inches high, 4 inches high. And I filled it up with about an inch of water. And so there's grout and all the joints and everything at the bottom. And so what's happened is that seal that's on that pan has failed. And so anytime you take a shower, even though you're not filling it up with water, the reason why we fill it up with water is because it's a much more obvious sign that we can see that the seal on that pan has failed, right? Now, when you're just taking a shower, it slowly drips through and all the time. And again, no one else is doing that. This is just a normal use of a shower, right? But that's what's happened over the years from just use of that shower. It's leaked through constantly, right? So now that wood is rotted, and now the area down below is destroyed. And so what needs to happen now, unfortunately, is a beautiful shower stall needs to be ripped out and it needs to be re-waterproofed. And so this is the kind of thing that you would not know unless you had somebody look in your crawl space to make sure that it's actually in good shape. The other things that we find are, improper repairs to structure, piping that's leaking. Sometimes we just run into drainage piping that's leaking. Most of the time, that's not as big of a deal. But as I've posted on my Instagram on a few different occasions, we go into these crawl spaces and sometimes the pipes are just broken and completely disconnected. These ABS pipes are pretty resilient, but sometimes there's damages that occur from other people that are going down there, or just movement over years of time, heat and cold, and maybe a rodent or something else got down there and did whatever. But the thing about it is that all of this should be looked at. And if you're gonna buy a house, you want to make sure that this is all in good shape. So underneath this is actually the drain for the shower stall right here, this area right here. But this whole shower stall takes up this whole area right here. You can tell that they've done some previous repairs in here as well. Let me pause that. So the thing about crawl spaces, the other thing is, for example, somebody came in at some point and they did some repairs, or they did some additions here, and they took out a post that was attached to this pier right here. So they're actually compromising the structure of the house because they've removed something that should have been there just to install this pipe right here. Yeah. So this particular house, it was like wavy and had all kinds of situations going on. But again, this is the kind of thing why it's important to really take a look at these crawl spaces. And again, just the great thing about this tool, like I said, is it can pretty much go anywhere, almost through anything, drive over anything, and again, this is advantage that you're not going to be able to see in most cases, and
did you make this RV tool for the cross space inspections, or do they actually sell something like this for
So
inspectors?
they do sell these. They actually do sell these for inspectors. I chose to, number one, I don't particularly like a lot of what's on the market. Number two, they're insanely expensive, and in my
Yeah.
opinion, not worth what you're paying for. The vehicle that I chose was actually a decent price that made sense. I actually like it because it's got a big wide platform, a lot
Mm.
harder to flip over. Because what happens is,
What'd you
lost
say?
my screen there. What ends up happening is if it flips over, then you're going in the crawl space and you're going to go get it. So
Yeah.
yeah, that's the situation. Then that's the situation in the end. I think my software crashed here. Let me back out there. But yeah,
That's
I
pretty
mean,
cool, man.
but so yeah, in this particular case, yeah, this one I actually put this one together.
Oh,
I'm
okay.
comfortable with it. Yeah, I'm comfortable with the actual vehicle that I chose, and then I added in cameras that in my opinion, in this case, I like the idea of having the 360 camera because it's always recording and it's always going. And then I have another camera that I actually use to drive it around so I can see, and it's Wi-Fi, so I can go anywhere in the house and actually do this inspection while I'm doing it.
Yeah,
So
that's smart.
um,
That's smart that you put a 360 camera on it.
yeah, and like I said, it's always recording, right? So I actually have a different vantage point than I do even during the inspection while I'm doing it, right? So I can
Mm-hmm.
come back and review that footage. It's just obviously, it's great to have the knowledge of knowing all of these different things. And when you're doing these inspections, you need to know what you're looking for. You need to have that knowledge. But at the same time, having good tools and being able to do things that you might not necessarily be able to do, and you want to be able to get as many things inspected for you for that client as possible, right? So before you might have a rainy day where you can't get on the roof and look at it, or you might have a roof that's so high and it's raining and you just can't look at it, right? So I can run a drone up there or whatever it is. Well, a lot of times you can't run drones during the rain and during windy days unless you have a very
Right.
expensive drone, right? So I just use a pole camera, so I can actually see all around that roof. But then the idea is instead of telling my client, hey, you need to go get another roofer or whatever to come out here and then delaying the transaction, it's like, let's get as much done as we can now, get you as much information as you can now so that you can make this decision. And that's really what it comes down to when you do all of this stuff, right? You need to make sure you have a great educated decision, and that way you can decide really what it is, whether or not you want to actually make this purchase or not, right? So, but again, crawl space is very, very important. The other thing is having a pest inspector go under there and check to see if there's termites or any other kind of, fungus growth or wood destroying organisms or insects.
Leo doesn't just review the footage that you took and just
No.
kind of okay.
No, pest inspectors, and that's the thing. If this is flooded, the pest inspector can't inspect it. This is a home inspection thing only. Pest inspectors need to crawl every wood member and poke, and actually, if there's a problem, they need to actually poke in there and really check. They need to verify these things. So it's a little different for a pest inspector, and that's unfortunate. But it's what's required. It's what's required for a home inspector. I'm already just looking through the same stuff myself. I'm not poking for rot or any of that stuff, and I'm not looking for termites. I'm looking for a whole different scope of things, right? So with this tool, everything that I need to do with this tool, I can see everything that I need to see so that I can give a good inspection. But unfortunately, pest inspectors, for now, right? Somebody's going to invent something that's got a little arm that pokes in there for you and checks, and it's only a matter of time. But yeah, exactly. But yeah, pest inspectors have to do a much deeper inspection and much more in depth. So unfortunately, when it's wet and muddy like that, it just makes it a lot harder. But normally what we would end up doing is telling them, well, hey, you got to dry the sub area out. But that takes a long time. It takes a good amount of time. If it's just muddy, you can get in there with a Tyvek suit and get in there and you're usually okay. But when it's like soaking and you're like crawling down and you can't get around it makes it very difficult or impossible to get into these spaces safely.
No, I believe you. I remember one time I ordered a pest inspection from you guys and to come out, and my sellers was home. My seller was like, "Chia, that dude just poking on my outside trim with a screwdriver. Why is he doing that?" I'm like, that means he spotted some dry rot.
Yeah, and let me talk about that for a second too, okay? That's the thing. We get so many people that get upset. I understand. I get it. It looks like crap afterwards, right? But here's the thing. that wood would have not crumbled or even been able to be poked into if it wasn't rotted. So I understand that it looks
True.
bad and you just poked a bunch of holes in my house, but you have a bunch of rot all over your house and you have to identify it, right? So no, I get it and I totally understand, but this is the point. If the wood wasn't rotted, you can't just stab into a piece of wood with a screwdriver and it's gonna stab into wood. It's a very, unless you're dealing with pine, it's a very hard product. It's not like you can just poke at it. If you can poke at it, it's rotted. And when it just crumbles to nothing, it's been rotted for a while.
I know. One
So-
time, I swear, it wasn't myself. I was representing the buyers, and the pest inspector just started poking on some outside trim on the garage, and the wood just collapsed and broke to pieces. And the owners were home. The owner was like, "You guys better pay for that." And then we're like, "That's a rotted piece of trim, sir." And then the pest inspector didn't even poke it that hard. He literally just got his sharp little screwdriver and just kind of poked it, and it just broke to pieces.
Yeah.
And it got the owner super pissed off. But yeah, I could kind of see that.
Yeah, there's some things that are pretty obvious, and you can just kind of put a little bit of pressure on it, and it's rotted. You don't even need to poke it; it's all shriveled up and just rotted. You know that. But when it comes to certain things, I mean, that's the point. It's like you got to push on it a little bit. And then the other thing too, this is the other thing. So what they'll do is, and because you don't know any better, right? So what happens is a homeowner or a really bad handyman will come in there and just glob a bunch of caulking in there or some kind of wood filler or something, thinking, oh yeah, that's fine. That'll take care of it, right? It's smooth now. And then they paint over it and it's all good. Yeah. So what the pest inspector does is then they go in there and they poke in those areas that are always suspect, especially in the corners where the wood joints meet. They poke in those areas that are suspect, and then they poke it and it's soft, but then it kind of pushes in because it's the caulking, right?
Yeah.
You got to understand, it's like this is a living organism. It's rotting the wood, it's eating away at it, right? So you can't just put some stuff on it and call it good. You got to cut it out. It's like a cancer. You got to cut it out to stop it from continuing to grow.
Nope, I agree, man. That's some good stuff. But we have a little bit of time. Thank you for sharing that video. That was pretty cool how you show that 360 footage down there. That's a very unique perspective. But since we have a little bit of time, I do want to share a screen and talk about this other topic, because I've been getting you guys, Chishi fams, reaching out and saying, Chia, I don't think I should buy because the market's gonna crash. Somebody told me that the market's gonna crash and I should wait and hold on to my cash and buy a bunch of homes instead of just buying one home right now. So I wanted to share something with you guys, okay? And I also got another person that asked, Chia, I just bought a home this year or last year. If the market does crash, like what everybody's been telling me, should I just sell now? And this is what I'll say, okay? If the market crashes, I'm not saying it is, okay? I'm just saying let's play along with this. If it crashes this year, do you have a stable job? Are you stable? Does your spouse, does your partner have a stable job? Are you guys good? Like, if you guys are good, you don't plan on moving anywhere or doing any like sort of craziness, changing your livelihood and all that, then you're good. Okay? Because here's why, and this is gonna go to why I'm sharing this, and you guys can see I crossed a lot of things out because I want to protect this client. This is a seller of mine, okay? They bought their home in 2003. Okay. 2003. They bought it for $239,000. I know what you guys are thinking, but we're not talking about that in this topic. That home was cheap. But they bought it for $239,000 in 2003. Okay. Towards the end of 2003. That's December right there. Okay. And when the market crashed in 07, 08, I remember this family telling me that, oh my gosh, what are we gonna do? And if you guys see here, well, actually, I can't show it to you guys because it's gonna involve too much personal information. But anyways, this property, they did a bunch of refis because when they bought this home, believe it or not, they bought it with adjustable mortgage rate. an arm, okay, because it was cheap getting in. I think their interest rate at that time was like 7%. And then when the market tanked, it went to 11% because they had adjustable rate. So they refied out. And I remember when I met up with the seller, they told me this story, and I was like, y'all bought in 03 and y'all survived the market. Like y'all survived the market crash in 08 because they kept on to it. And I remember she was like, I remember I went over to the house and I was like, I think I could sell your home for 280. Or maybe I think I quoted them 260 or 270. And they're like, no, you can't sell our home for that much, Chia. We bought it for 239. And when the market crashed, I don't think we're around that time yet. I think if you're lucky, we'll break even, we'll get 230. And I was like, let's put it on the market for 260. And I ended up helping them sell it for 280 in 2017. This is a couple years ago, okay? So why am I showing this to you guys? I'm not showing this to brag, but I'm showing you guys to say history repeats itself. The market, there's a cycle that you guys need to understand. And that cycle always repeats itself. They say that it normally takes about a little bit over a decade for that whole cycle to repeat itself. And look at this, 2003, 08 crash. You think that took 10 years? It took like 9 years. It took 9 years, and then now they actually made a little bit more than what they put into it. So if you are buying a home today, or if you already bought a home this year or last year or the last couple of years, and you think a market is going to crash, as long as you hold on to it for like a good decade, like this person, this couple, this family did, you'll be good. You will survive this wave. And if this home that you bought these past couple years was not the home you wanted, it was just a home to ride the waves of this crazy economy right now, then you could sell and maybe still come back on top and have enough to put down and as a down payment and buy your dream home that you've always wanted. Just like this family did right here. And this is just one of many. This is just one of many that I speak to and help that went through this and understood that because they held on to it, it worked out. So yeah, you're gonna hear a lot of news media say the crash is coming, sell now, or you're gonna regret or whatever. They're trying to like scaremonger you. They're just trying to put fear into you so that way you could, keep the economy flowing, because the economy moves when you spend. When you stop spending, when you stop selling, anything like that, then the economy doesn't really does so well, but it'll survive. We've survived for the past 2000 plus years. We will be fine. Okay, again, I'm not saying a market crash is going to happen this year. Okay, what I am saying though is that if you guys are contemplating buying or selling, don't let what you guys are hearing from gurus or the news media tell you. Look at data. Look at actual data. One of these days I'll show the data again from 2007, 2008, the actual crash, and I'll go over that again with you guys so that way you guys could fully understand how the market was like during that time. Because right now, again, there is not a lot of inventory at all. There's no inventory at all, y'all. Like, yeah, I don't know why it's doing this. But let me just share this again. Like, there's no inventory. Okay? We got 2.1 month worth of inventory. That is not enough. That is not enough inventory to be able to support the demand today. Even though demand is a lot lower than what we've seen in the past year or so, there is still demand, and there is also a lot less inventory right now. So if you could afford to buy a home and just stick it through until the market corrects itself and ride this wave and provide stability for you and your family, then you should definitely consult with somebody and see if that's something you should do. And
I feel
that's
like it's important to remember why all of that happened in 2007, 2008, and then also do
yeah.
lots of history, get historical data. You know, what were the interest rates in the 80s? You know, wasn't it like
Oh my
something
gosh.
insane, like
12,
17?
15, something like that.
Yes,
Yeah,
something
17. Yeah.
crazy, right? Like really have an idea. Like everybody's like, "Oh my God, these interest rates are so high now. This is crazy." No, they were way higher than that before. Like you really gotta. You do all the historical data, especially young people that are just getting into this. Really look at what was really going on and really see how it was, and know that houses are an investment. You know, if you're buying to just buy really quick, that's fine. But a house is meant to be kept for a while and invest in, and you know, it's definitely something that that you need to do your research on for sure.
Yeah, always. Again, the best way to do that is to consult like a local expert that you want to work with, that has a heart of a teacher, and just ask them a lot of questions, and then go from there. And but really, the ultimate question you should be asking yourself is, can I afford this budget? Can I do that? Do I want stability? Because if you go and rent a home right now, you know, are you gonna be able to find stability? Because like landlords are also there's a lot of first time landlords right now too. And a lot of those landlords don't know what's going on too, and they're scared because of what happened in COVID and tenants wasn't paying. So that's why right now you gotta make 3x the amount of the rent. And most of the time, people gotta get a co-signer to even qualify for that. And then they're not refunding your application fees back now too. So that's the other thing. And landlords are doing that again because they already paid the price during 2020 during COVID. A lot of them let their homes go, and because a lot of tenants were taking advantage of that situation and not paying landlords, and landlords still had to make a mortgage. And some of those landlords decided, you know what, this is not for me. I'm jaded now. I'm never buying an investment property again. And then some tenants are like, man, I'm jaded now. I'm never going to rent again. I'm going to go buy my own home. That's what happened. So I'd say, consult with the local expert again that you trust. And then from there, just get educated, get informed and about the whole situation, about the market, and then just go from there.
And if you're going to rent, remember that the landlord or the property management company is going to do a bunch of research on you, but do some research on them. Ask some questions. If they're not willing to answer the questions, then maybe you shouldn't rent from them, right? Ask them how long they've owned the home. Ask them a few questions because they're asking all kinds of stuff about you to know about your history, but it's good for you to know
That's
about
good.
what kind of homeowner you have.
No, that's good. All right, and with that, we have like we're actually a little bit over. So, Lisa, you're back.
I know, guys, my internet's just terrible.
No worries. I was just gonna say we're probably gonna end the show. It's over an hour now. I want to respect everybody's time. For those of you that's gonna watch the replay, on the archives on the channel, just comment down below what your thoughts are. How do you think the market's gonna hold up this year? Do you really think the market's gonna crash? Like, what do you think's gonna happen this year? And yeah, we would like to hear some of that and talk more about that and engage more with you guys on that. But other than that, we will let you guys go and enjoy the rest of your evening. All right.
Have a great weekend, guys.
Later, everybody. Have a good night. Chi Chi fams.